Everyone wants to live an inspired life, yet so many people search for happiness following the footsteps of peers and taking advice from people who have different values and outcomes to which they're searching. There are people born into wealth, graduated from the best universities in the world, and there are people who have none of that and yet are living extraordinary lives full of fulfillment and reward. The purpose of this podcast is to share insights and strategies that allow you to question the status quo and think freely, so you can design your life and be who you want to be. We get one life. Time is our most valuable asset. I believe that when we're free and able to focus on meaningful work, we become better human beings. This is Always Free, and I'm your host, Jason Graystone.
Welcome to the leading podcast for financial empowerment and wealth creation. Subscribe to this podcast so you don't miss an episode. You can connect with Jason on social media and subscribe to the Jason Graystone YouTube channel for weekly videos. Don't forget to also subscribe to the weekly newsletter to receive frequent educational content and action steps to help you design your life so you can be who you want to be. For news on all future events and updates, go to jasongraystone.com.
Well, welcome back to the podcast, guys. I hope you're having a nice week so far. Hopefully you've had a good one. If this is the first time you're listening to this podcast, this is the number one podcast for financial empowerment and wealth creation. And if this is the first episode you've ever listened to, unless you're into trading, it's probably not going to make too much sense at this point. So I recommend you go back to episode 1 and start there, and then come back to this one later. If you are into trading, I've decided to do this episode about a trading topic that's very, very important to me. It's a very common kind of topic that I get asked about and help my clients with. And if we work closely with our traders inside our tier 1 trading community to develop this side of their trading. And it's something that's not really glamorized or spoken about much out there, which is why I wanted to share it with you guys in this episode. So throughout this podcast, you've really gotten an insight into all the kind of steps along the way of sustainable wealth building, from personal finance to structuring your personal and automating your personal finances, automating your banking, saving up cash cushions, being able to deposit regular amounts into the markets. You've learned from passive investing right through to understanding stocks and businesses, up to businesses, your own businesses, and growing your income, building your personal income. And then we've gone into speculation, and I've spoken about trading a few times on this podcast, and I want to talk about an important aspect, which is backtesting. Okay, because I get a lot of questions about, what do you think about backtesting? Do you need to do it? Do you not need to do it? And there's some people out there, and over the years I've seen people kind of fall to the tragedy of not doing this. And at the end of the day, in not just my opinion, but proof, and working with thousands of traders and working with prop firms, very, very reputable Wall Street prop firms, London prop firms, I've seen it firsthand. And I want to talk to you first of all about what it is, because a lot of people listening don't really get it, and it's a key element to trading. If you're looking to go into trading, backtesting is essentially your market research in kind of normal business terms. And what it is essentially going back over historic data to test an idea, because all trading really is identifying moves that are frequent in the market. So kind of, regular patterns that happen in the market, frequent patterns that happen in the markets, and then using that knowledge and identifying that pattern that happens frequently in the market, and then applying some rules to it that are kind of binary, so that it takes it from being subjective to objective, and then you want to take that through a testing process. So it's essentially going through historical data and testing your rules. Testing rules that you feel will allow you to capitalize on a frequent move in the market. And that's not just an edge. You hear people talk about an edge. An edge is much more that gives you an edge in trading. It's not just having a profitable system like this. This is just a tiny piece of it. But it helps to start here, because if you don't have a system with a profit, a positive expectancy, then there's no point even going forward. And the only reason that you know that you've got a system with a positive expectancy before you start putting your hard-earned cash on the table to trade it is if you've done this testing process. So a lot of what I'm going to say in this podcast is going to sound very obvious to people with common sense and people who are good business people and investors. It's not going to make sense to people who are the ones who kind of want to blame everything else so that they can avoid the hard work that goes into it. But I assure you, every single 7-figure trader that I've met has done this process. You put the blood, sweat and tears into it, I'm afraid. All right. So that's what it is. How it helps is, first of all, with psychology. So psychology in the way that if you're looking back, we never know what's going to happen next in the markets at any one time. Okay, traders never ever know what's going to happen next. And if you find out that there's traders on Instagram telling you that they can guarantee you this and that and they know what's going to happen, run a mile, because it's absolute rubbish. No one ever knows, not even the best traders in the world know what's going to happen next. We don't know, right? It's all probabilities. So in a game of probabilities where we want to be on the right side of that probability and we want it skewed in our favor, the only way we can get to that point and have the mental strength to go forward into a market of unknown future, we need high probabilities. And the way we get those probabilities is having put in hours and hours of testing of historical data. So that when we start taking losing trades, which we all do, we can compare that to the data in the historical data of our test results, and we can say, look, this is perfectly normal. This is nowhere near my maximum drawdown. This is nowhere near how many losing trades I had in a row before when I did the test. And it allows you to remain calm and trade to the rules, because you don't care. You just know that all of that move that happened in the market that you built rules around and you went and tested, you know that all you've got to do is just do that going forward. And it doesn't matter if you lose 1, 2, 3, 4, 5 trades in a row, because your maximum losing trades in a row was 7 or 10. And after that, on average, you're going to be profitable over time. So that's what we're focused on. And if you don't have those results, you're going to have a real hard time going out there and putting your money at risk, because you're in no man's land. You don't know what's going on. Another thing you get from backtesting is you're connected to the numbers. Okay, you get really connected to the markets. You get a real kind of a discretion that is built when you put that much work into going to test and put numbers into a spreadsheet and things like that. It really allows you to get connected to the market in a way where you can almost feel the breathing patterns. And I'm not going to say you know what's going to happen, but when you put that much time into the charts and you get connected to the numbers that way, it allows you to get a real feel for what's likely to happen at any given time. Okay, and that helps when it comes to psychology again. All right, your maximum drawdown period, so you know how much you lost in the future as a maximum trade. You know how long it lasted. Your maximum kind of average typical losing streak, and your maximum wins as well, and that's really important as well. So you can say, well, look, I know I'm winning and I'm feeling a bit cocky right now, but if I look back into my historical data, well, I can see that, this isn't actually my biggest winning period, or it is my biggest winning period, so I need to be a bit careful here. I need to remain a bit poised. So it helps with that. It helps with your mood. Also, if you're backtesting, people who don't backtest usually aren't journaling their trades as well. So they're literally going out there every day, starting from scratch. And an edge is developed by refining and tweaking a system that you're already doing. If you're not journaling your trades or backtesting, you are going to have a real hard time figuring out what you should be doing next, or if you tweak this, what happens? If you tweak that, what happens? And if you're journaling your trades, well then after a 6-month or 12-month period, you've now got your new set of back-tested results, which you can use to then refine your edge. And this is a very efficient way of dynamically building discretion with the market, instead of everything being in your head, which is pretty much impossible. The best traders in the world focus on something called gross discrepancy performance, and that's essentially the sum total of all your errors due to not trading your system flawlessly, okay? And that can be on winning trades or losing trades, and it should equal 0 every time you do the assessment, every single month, every trading session. And if you have no tested system in the first place, and you've got no positive expectancy, you're in no man's land, and you can't trade that going forward. It's going to be very, very difficult for you. The next thing is investment. If you want to trade other people's money, which many retail traders seek, they learn the skill of trading, learn the art of trading, they want to boost their capital, so they go out and attract investors. Well, listen, I'm an investor, and I'm quite a speculative investor, right? Meaning that I've got kind of a high appetite for risk. I have an allocation of my investment portfolio that's just for real high speculation, like startup businesses, investing in other traders, and that's something I'm actively looking to do right now. I consider myself a speculative investor because I'm a trader. Now, even if you come to me with no numbers, and I just said, look, what's the best case, worst case scenario? When am I likely to get a return? What's the worst case? What's the best case? What's the maximum drawdown period? What's the maximum I'm likely to lose in one kind of short period of time? How long did that last? What's the longest drawdown period in terms of time and cost and money? If you just turn around and say, I'm just going to put my finger in the air and kind of get a feel, I'm just a discretionary type of guy, I'm just going to laugh you out of the room, and so will 100% of the investors that I know. So if you're looking to get invested, no one's going to take you seriously because you haven't done your market research, you haven't got a business plan. Trading is like any other business. Your backtesting is your market research. The beauty of trading, though, is it's the only business, or one of the only businesses that I know, where you don't even need to spend a penny before getting some degree of certainty that you've got a profitable business model. You've got all that historical data that gives you a proven model. All you have to do is put rules around it, test it, and you can produce an equity curve, and all you've got to do is go and trade that. There's not many businesses that will allow you to do that, so it blows my mind how many people lose so much money trading because they're gambling and they think they're trading, and that's why it's got a bad name. There's no need to even spend any money before you've got a profitable system. This is the crazy thing. It's like the least risky thing, trading. So on top of that, every prop firm, proprietary trading firm, every firm that I've ever spent time on with, they will not allow their traders to trade without test results. It's as simple as that. I'll give you a little example of how this helps you go into the markets live and how it helps with your psychology. There was a while back, I was working with a client and they did some testing and then they started trading live. Okay, and for 2 years they were breaking even, right? 2 years they were breaking even on their system, which, to be honest, is pretty good because it proves that you can trade consistently. If you're breaking even, you're trading consistently at least for 2 years. Now, came to me and said, look, I'm not getting the results I wanted. I said, did you test everything? And he said, well, no, I started and then I lost a load of data on a hard drive and I kind of got a bit discouraged and I just wanted to just go out and trade. So the guy was trading about 4 or 5 different strategies on about 15 different currency pairs, okay? And what I did is I said, stop trading and go and test them. And I gave him 3 months to go and test everything again. Well, wouldn't you know it? After 3 months, he come back to me, produced a report, and he said, do you know what? This strategy is not profitable on this currency pair. This currency pair isn't profitable at all. This strategy doesn't work between this time and that time on this currency pair. So he removed all the things that didn't work. It's like it's like death by 1,000 cuts if you don't do this. And it's like those kind of employees that are stealing from you and you don't know where the money's going. You're bleeding, hemorrhaging from somewhere, but you can't identify it if you haven't tested. So he went and done it, and he removed those and straight away started doing 4% a month. He was on track for doing about 50% for that year. And it was all because he put the work in. 3 months of your time to go and put the work in to develop a system that's going to develop 50% a year. So that was a real life situation. And that, if that doesn't prove the importance of backtesting, I don't know what will. But if you're listening to this and you are a trader and you don't think it's important to backtest your trading system, then you better have a lot of time on your hands, okay, to basically just go around the bush and kind of make it up as you go along, and a hell of a lot of money to learn on the fly. All right, there's an argument that people need to feel connected to the money and the live feel, but that should be after you have a system that you're happy with in the first place. All right, so I've got one question for you, and that is, why wouldn't you? Why wouldn't you test your system? And it all comes down to the hard work and trying to avoid hard work. I was speaking to a fitness professional friend of mine the other day, and he said, it's funny when you've got people talking about how a system or a program doesn't work, they never blame themselves. They always blame the program. And I'm telling you, people who don't want to put in the work, if you don't put in the work to get a six-pack, you'll blame the program or blame the fad diet or blame whatever it is. You won't blame yourself. In actual reality, you've got to put in a little bit of effort and work if you want to see results. And that's the same with this. You're going to get results better, more profitable, and you're going to get them more efficiently, and you're going to get there quicker, and you're going to go trading live quicker as a professional trader if you just put in the work. There's a great saying from carpenters. It's, if you measure twice, you cut once. And that means you put in the work before and you get the result much more efficiently. So a bit of a tangent, a bit of a rant. It was kind of inspired by a conversation I had with my trading guys in my live session this week, which we've had a quite an active week in the markets, to be honest with you. And it came off of that. So I thought I'd share it with you, particularly those of you who are interested in trading. If you're an avid listener of this podcast and, trading, you're not quite into the trading yet, well, fine. I appreciate you listening this far. If not, you probably switched off. But I'll be back again next week to talk about something a little bit more light-hearted instead of ranting. But I appreciate you listening, and if you got value from this, make sure you share it. If you're banging heads with someone who's telling you that you don't need to test your system, share this with them. I would love their comments. I would love them to answer my question, why wouldn't you? I want answers to that question. Alright guys, so if you want to learn more about this, of course, I teach traders how to trade and build successful, profitable trading businesses inside Tier 1 trading. And if you've got any questions, reach out to me. I appreciate you listening. Until next week, have a great rest of your day and weekend, and I'll see you then.
Subscribe to this podcast so you don't miss an episode. For news on all future events and updates, go to jasongraystone.com.